the price is kind of plateaued. What's going on with that?
Well, I mean, let's be careful. Bitcoin has doubled on the year. What's the S&P on the year? Up small, and Bitcoin is up 100%. And so what you're seeing is money continue to pour into the space. We just went over $2 trillion of wealth market cap in crypto. And so that's a pretty significant number, right? If you think about it, there's $140 trillion of US wealth, $400 trillion of global wealth. So we're now up to half a percent of global wealth is in crypto. And that's growing. I think it'll be 1% by the end of the year. And so if you look at the overall space, it's been an amazing week. It's just Bitcoin is pausing a little bit.
Talk a little bit more about how it's now not only starting to appeal to corporations, but there's been a lot of talk now of how governments could actually start getting involved in this. What happens if that happens? Because I keep hearing it sort of pitched as a good thing, and I'm not quite sure I understand how.
Well, listen, there's a bunch of different lanes in crypto. So Bitcoin has carved out this lane of store of value, of digital gold. And so most governments don't care if people are putting their money in gold. Listen, if they do a horrific job managing their finances, more people are going to want to take their money out of that country and put it somewhere else that's safe. Right now, Bitcoin is being seen in the digital world as that place. And so in some ways, it's a report card on central banks and Ministry of Finances on how they're doing. If Janet Yellen and Chairman Powell land this super tanker the way they hope to, right? Growth, just enough inflation, deficits start coming down, the impetus for people to say, I need a store of value goes down. Right now, people are worried that governments are printing too much money, and so you're seeing Bitcoin go up. I don't think Bitcoin is going to be what we use to buy shoes or sunglasses or Diet Cokes, right? You're going to see a war in payments where stable coins, central bank issued digital currency, stable coins vie for that space. But what's important to know is that all gets done on a blockchain infrastructure. And so go ahead.
Oh, Mike, I know you're focused a lot on Galaxy, obviously, but you also play in other assets sometimes. Bring us inside of your trading desk a little bit in a market like this. What are you buying, whether it's other types of digital currencies or stocks right now?
So, listen, I bought Facebook stock because Facebook's going to come out with the Novi wallet sometime this quarter, I think. And all of a sudden, you're going to have 2.4 billion people connected to this crypto space. And it's going to be a public equity way to participate in payments and in blockchain through their Diem project and their Novi wallet. And so I thought Facebook was an interesting buy on the chart. Took out 290, looks like it's going to go higher. I'm short a lot of interest rates, right? The one story that could hurt this asset price inflation is that growth happens so fast. Everybody gets jabbed. We get the explosion of growth. We get 1 million jobs, then 1 million jobs, then 1 million jobs, and that pal by Jackson Hole flinches and says, I've got to taper. And so to me, being short the 5-year part of the yield curve is a great hedge for any portfolio, crypto or non-crypto, because assets have gone up with the same theme. They've gone up with the theme that, the central banks are putting too much money into the system. And if that money gets pulled back a little bit, assets are going to go down. And so to me, that's a great hedge. Everyone who's long Bitcoin should be short the 5-year.
Okay, you're short the 5-year, so what are you projecting yields to be? Are you short the 10-year? How high do you think yields can go?
Listen, a lot of this is going to be, it'll be driven by two things. If the growth happens the way it looks like it could happen, will Powell flinch or not? Will the market push him to flinch? And then once he starts flinching, yields can go another 100 basis points, 150 basis points higher. If he doesn't, you really have to watch the 30-year. Does the market trust them, right? And so if the 30-year sells off, that basically means the market's losing trust in the financial authorities, in the central bank and the Ministry of Finance. What I think I learned, I was an emerging market investor my whole life.
Yeah.
Emerging markets, yield curves really were sensitive to fiscal adjustments. And in developed markets, the differentiator was yield curves. There was no correlation between, the fiscal deficit and the shape of the yield curve. there was some kind of weird zone out there, where the demons lie, that you switched from being okay to not trusted. Thank goodness for the G3, G10, it hasn't hit that zone yet. They call it the Minsky moment, when people lose trust. But the chances we hit it are higher than they've ever been, because our deficits are so big. Listen, I've got my fingers crossed. I don't want to see the world fall apart. I don't want to see the yield curve steepen like crazy and the dollar sell way off and Bitcoin rocket, to the moon, because it's going to be total chaos on the streets.
Yeah.
But that's what we're watching.
But I mean, we talk about that Minsky moment. I mean, I can see how you can apply that to maybe some of the developing markets out there right now. I could even see how you can maybe apply that to Europe. Applying that in the U.S. seems like that's a pretty gutsy move to bet on that moment, given that, yes, you are seeing this increase.
So no one's betting on that moment.
Go ahead.
No one's betting on that moment. They're betting that the possibility or the probability of it happening is getting a little bit higher. Right?
Yeah.
Listen, we still have a pretty in control yield curve.
Right.
Right? We're not at 8% 10-year levels, right? And so when people lose trust, yields go straight up, right?
Yeah.
Or currencies. Look what happened to the Turkish lira over the last year.
But Mike, I mean, I agree with your point here, the idea of how people are betting on it, but there still has to be some sort of reaction here. And I'm wondering, what's the catalyst, given that it seems like we're sort of past at least the worst case scenarios of an economic crisis here. And even with the added fiscal spending here, there's some people that would point to the increase in economic growth, and they would say that'll be enough of a buffer.
And let's hope it is, but let's watch the political, right? In 2009, after the fiscal crises, the political group that showed up was called the Tea Party. And as Obama and his treasury wanted to spend more money, they were like, no, 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 right? There was a political force that said, stop spending the damn money. And the political force that exists today is the Progressive Party, who's saying, and maybe rightfully saying, we have such a gap between rich and poor. We should make college free. We should pay off student loans. We should give child tax credits. We should do UBI, right? There's a sense that money grows on trees right now. We just did a $3 trillion, $1.9 trillion fiscal package, and we're coming right back with another $2 trillion, hopefully paid for. But they're already talking about a second, COVID package. And so we'll see if there's any financial discipline in the Congress or not.
So tying in some of the comments you made about that maybe losing faith in Jackson Hole, as you mentioned, trillions of stimulus floating around. Money is cheap, it's free, everyone has it. Is it that leverage that is the root of the problem? There's too much money in the system and it's free.
Well, there's a lot of money in the system and it's cheap. And so, a LeBron James rookie card can sell for $1 million because people are saying, well, where else are I going to invest value? I don't have a whole lot of value in these dollars anymore. Let me put value elsewhere. And so we are creating one of the great asset bubbles of all time, period. And that's creating this gap between rich and poor getting worse and worse. And so it's this terrible cycle. But yes, and when you see things like Archipelagos, you have to put them in the back of your head. These are warning signs that we have excessive risk-taking going on, 100%. And you're now seeing it in the crypto space a little bit. Yeah. Forget Bitcoin and Ethereum. You're seeing a lot of these small coins just explode north for no really good reason other than people have money and let's go to the next thing. Yeah. And so I certainly have a radar up around some projects. The question is, who's going to turn the spigot off? And right now, it doesn't look like Powell's going to flinch.
Yeah, there's nobody there holding a mind in that spigot right now.
The institutions that are coming, the wealth channels, we talked about Morgan Stanley. There are a lot more coming. They're all coming Bitcoin first. And so there's a bid below the market in Bitcoin that's not going away.